Well, welcome back. It is time now for the Word on Wall Street. Top investors watching your money. Joining me now is Great Hill Capital Chairman and Managing Member Thomas Hayes. Also with us is Ryan Payne this morning. Great to see you, Thomas. Thanks for joining the conversation this morning. We've been talking about rates and stocks, and we want to get your take on it. The Dow Industrials right now down almost 400. Futures indicating a decline at the start of trading, even though, markets have been on a tear since the end of March. Look at these numbers. The NASDAQ up 26% in April and in May. You've got the Dow Industrials up 9.5%, the S&P up 16.7%, and the NASDAQ up 26% since the end of March. But markets are reacting today to a spike in interest rates. Yields this morning are higher, and that has the 10-year yield right now up to 4.61%. As Kevin Warsh begins his first week as chairman of the Federal Reserve. He's not been officially sworn in yet, but when I was talking with DoubleLine CEO Jeffrey Gundlach yesterday about it, his outlook on the Fed was not what many expected. He says that the next move for the Fed is higher. Watch this. On Kevin Warsh, the president wants him to cut rates. Can he cut rates right now? Would you ever see Kevin Warsh raising rates?
I think that based upon the term structure of the Treasury market, the odds-on bet is that the next move by the Fed will be a hike. I know that that was not the way we entered the year on the consensus thinking. People were looking for 2 rate cuts this year, but the inflation market has simply not cooperated. And it's just not possible, in my view, to cut interest rates when the 2-year Treasury is almost 50 basis points higher than the Fed funds rate.
Jeffrey.
The next move would be a hike.
Thomas, your reaction?
Yeah, well, James Carville once said, if I die and get reincarnated, I want to come back as the bond market because you can intimidate anyone. And that's exactly what's happening right now. It's forcing President Trump to have urgency. He put the threat out to Iran. Time is ticking. And he's absolutely right, though. Once this gets resolved, you're going to see gas prices drop like a rock. When that happens, inflation expectations will come down. And I think what's going to happen in that situation is you're going to see a rotation from what's been the most aggressive trade, which has been tech and semis for the last 3 weeks. Nothing else has worked in this environment, back into the everything trade once that inflation fear goes away. So yes, right now, Fed Fund futures say a 51% chance of a hike by December. I think you get any positive resolution in the Strait of Hormuz, and those odds drop immediately, and Kevin Warsh can go about his business of draining liquidity from the balance sheet and beginning the cutting process. It won't be immediately, but right after the regime changes and the Iran situation is normalized, that's what you're going to see in the market.
I mean, I don't disagree, Ryan. I mean, when you look at some of the policies that President Trump has put in already, it's created an incredible backdrop. Remember tax day? Refunds were up to $3,400 on average, up 11% or so. You've got tax cuts in the big, beautiful bill. You've got all this expensing for businesses. So the backdrop is ripe for a great economy and market, but this spike in inflation has futures market expecting a hike. You heard what Gundlach said.
Yeah, I did. And I think, some of this is because we have a great economy, right? If you're tracking at 4% economic growth, which remember the last decade was like 2% economic growth, you have a labor market that's heating up, which means wage inflation is going to start to pick up. Consumers are clearly spending money, and they should be able to spend more money if the economy continues to grow. That creates more demand. That, to me, is going to keep inflation elevated. And let's face it, I mean, since World War II, the average inflation number has been 3%, not 2%, the target we've been hearing about for 5 years. So I don't think it's actually a negative, but I think a lot of it is because we have a much hotter economy, and that's not necessarily a bad thing, Maria.
Yeah, and we got to talk about the hyperscalers and the Nvidia quarter, because that's going to be the story of the week when Nvidia reports its quarterly earnings on Wednesday. Nvidia expected to earn $1.76 a share in EPS, revenue expected at $78.67 billion, Ryan. By the way, you also have major retailers reporting: Walmart, Target, Home Depot, TJX, all on deck. And we know that in the last inflation report, it showed consumer spending is still strong, and you've got a very strong strong productivity story. What are your expectations first for Nvidia, Ryan?
I think, look, the story is this. The hyperscalers are not dialing back on spending any money right now. A lot of that's going to fall to Nvidia buying more chips. I think the number is going to blow it out, and they're going to even up their forecast for the year. That stock was trading sideways since the fall, and then all of a sudden overnight, it's up 20%. So I think the tech trade is back on. The animal spirits are out. Money's going to continue to flow there. I think the numbers are going to be good. And I think that's just the name of the game right now is earnings expectations are going to continue to beat. And there's a lot of money that has to get in this market. So it's going to continue to fuel not just tech, but literally every sector right now. It's just everything rally, essentially.
Yeah, it certainly is. And I'm going to be speaking in a moment with Cerebrus's chairman. It's supposed to be a competitor to Nvidia, so I want to get his take on all of that. All right, let's take a look at Apple, and I want to get your take on this because the Journal is reporting that Apple is, quote, making hit products and high profits from imperfect chips, saying Apple has managed to develop a booming business selling cheaper devices when most gadget makers are hammered by rising costs. One of its secrets, using chips with slight defects that might otherwise be thrown out. Semiconductor stocks right now look like this after Cerebrus's major debut. Stock is up again this morning, up another 1.5%, Ryan, after that huge IPO on Friday.
Yeah, no, I mean, I think what you have to start wondering, though, is are the animal spirits getting a little too crazy? If you look at Cerebrus, I mean, it's trading for 114 times sales, Maria. That's 114 years worth of revenue. So I think what that says is everyone's going to want to go public right now because clearly you're getting rewarded in a big way. And we're talking about SpaceX, maybe at $2 trillion. That's just a wild, wild valuation. So I think you're going to see the floodgates open here. Everyone's going to go public in this market.
Well, we got a lot on the docket, Thomas. The year of the mega IPO, that's for sure. SpaceX is expected to give us details soon. That could happen in June, early June. You got OpenAI expected an IPO later. Anthropic also expected to go public. And SpaceX is expected to happen as soon as June 12th. News story this morning, BlackRock reportedly considering a $5 to $10 billion investment into SpaceX's deal, the public offering. And Cerebrus debuted on Friday. It soared 68% at the close of the first trading day. The stock is up again this morning. Thomas, your reaction?
Well, SpaceX wants to raise $80 billion at a $1.75 to $2 trillion valuation, about 80 times sales. They're going to give 30% to retail. So I do think that this is going to suck some liquidity out of the hyperscalers into the Anthropic, into the SpaceX, into the OpenAI. So keep an eye on that because you have a over $10 trillion market cap on Amazon, Google, Tesla, and they're only last quarter only did $6.6 billion of free cash flow. They're spending a lot of money, so I think people are going to maybe take a breather from those and put it into the SpaceX, and those might take a breather for a while.
Well, I mean, that's a good point because there's only a finite amount of money, right? And so if I want to buy SpaceX and some of these other things that are coming to market this year, what am I going to sell to raise that money?
That's right. And I think it's going to start to come out of the hyperscalers, including Microsoft. As we see their free cash flow diminish as the CapEx stays up, people are going to say these valuations are getting a little bit rich, and they're going to look for greener horizons, and that might in fact be SpaceX, Anthropic, and OpenAI.
All right, we will leave it there. Thomas, great to have you this morning. Thanks so much for joining the conversation. Ryan, you're with us all morning long, and we are grateful. Don't miss my upcoming interview this morning with one of Cerebrus's earliest investors. He is now the chairman of the company. Lior Susan is here with the growth story of Cerebrus after that 68% rally on the IPO on Friday. That's coming up this morning at 8:20. Stay with us. We'll be right back.